Welcome to the Nick Halaris Show. This is the place where we explore big ideas with people having a big impact on our world. I'm your host, Nick Halaris, serial entrepreneur, author, early morning riser, and seeker of truth and wisdom. Join me as we explore the journeys and discoveries of fascinating people who are literally unlocking the secrets to creating a life of both success and fulfillment. Each episode will arm you with insights, ideas, and practical perspectives on what it takes not only to be financially and personally successful, but also how to start having authentic impact on the world around you. Hi, everybody, and welcome back to the Nick Halaris Show. We are starting a new segment on the show. I'm not even sure what I'm going to call it yet, but the idea is to feature the work of really interesting people who are pursuing either a socially conscious business or activism or writing a newsletter or producing a podcast in an effort to try to make the world a better place. And our first guest is Kent Keirsey, a friend of mine, yet again from the Stanford Law Network. There's been a ton of Stanford alum on here. People might be beginning to think that I'm affiliated with the school, but I'm not. But Kent is the president and co-founder of a really interesting company called Acre. And welcome to the show. Thanks for being here.
Thanks, Nick. It's great to be here. I didn't realize I was the first one, so I'm excited. Hopefully I don't make you decide not to do this anymore by messing this up. So hopefully we can have a good conversation. For
sure. No, I'm confident that this will be a great start to this. But I've sort of been featuring the work of interesting entrepreneurs and activists and philanthropists already. But the idea behind this sort of segment of the show is to just be a little bit more intentional about it and say, okay, what is this individual really trying to do, and get into it a little bit and use the show as an opportunity to get the word out about whatever the mission is that I find interesting. So
that's cool. I think the Stanford connection is really interesting here because that's where I kind of first came across this idea that you could create good in the world by building companies. I was in the Army. I went to West Point, was in the Army for a little over 5 years, active duty. And when I got out, I went to Stanford Law to try to figure out what people do in the real world and try to figure out how to continue my service in different ways. And I audited a class at the business school I was there, and they brought in all these entrepreneurs that were building companies. And it really kind of sparked my interest because I'd never been introduced to the idea that you could just create a company from scratch. For me, going to work at a company was like what they recruited junior military officers for out of the Army. It was go work in consulting, go work in banking, go work as a middle manager in Fortune 500 company, all which seemed like less fun versions of what I was doing in the Army. And so I was going to go into policy or politics at that point in time. But I ran across some guys building companies, and they weren't necessarily straightforward social impact company. One of them was the TRX guy, the Navy SEALs, who was building those bands that you could do in the gym. And I kept thinking, wow, this guy's out here just hustling and making this thing work. And he's growing this brand and business. And the instructors were making fun of him because he was, basically selling nylon straps with handles on them for $150 a piece. But they were also investing in this company. And the other guy was this guy, Kirk Hawkins, who had built a company called Acre Aircraft, which again wasn't, it was just a passion of his. He thought that building a cool light sport aircraft would be something really interesting. And I thought to myself, well, if these guys can build, like literally not an engineer or an aeronautical engineer, but could build a brand new type of aircraft and over here, and this guy could create a brand from nothing, I realized that anybody could really do anything with some grit, determination, and vision. And that was really inspiring to me. And on top of that, I loved the concept that you could build a culture from scratch, and you could take all the best things about building an organization that you love to work at and build around that. And that was really exciting to me. I love building teams, and I love building positive cultures where people can thrive and do their best work. So even if you're not focusing on a social impact directly in your company, you can still have a huge impact on the people that come to work every day and make sure that they're able to do their best work and they're inspired by what they're doing. But I also found during the course of, this is my fourth company, that the companies that are the best to work at, where you can recruit the best people, where the people are willing to put in the extra hours and feel inspired about what they do and talk about it when they go home with their family with a lot of enthusiasm, are those that do have a positive impact on the world. And I think that, honestly, that's most companies, in the sense that, what a company does is it should take some kind of, in the simplest sense, if you're building widgets, you take some raw materials, you build a widget, and someone's willing to pay you more for what you've built than what the original materials were. And that's why it's a business that works. We all know from law school that there's also companies that have lots of negative externalities that they don't ingest. And therefore, there are some companies out there that might not have necessarily a positive impact on the world. But if you get rid of negative externalities, you're creating value. But if you can do on top of that, solve some really large problems in our country, you can build great businesses, you can provide value, and you can, and through that innovation, you can really pull us forward as a country into the kind of the next, or as a world into the next phase. And so before Acre, I built a company in healthcare. It was called Collective Health. So the company in healthcare was called Collective Health. It's out there in the Bay Area. And what we realized is that, healthcare costs are going up, but the underlying cost of the care isn't necessarily moving up exponentially. It was the administrative burden and all these other things were driving up the cost of healthcare. And we couldn't figure out why. And we looked at it and we said, you know what? There's just not really great incentives. And so who has the right incentives, and who can we build for that we really will be driving innovation in healthcare? And we realized in the U.S. system, because we have a unique system here in the United States, where aside from the U.S. government, employers pay for the majority of healthcare in the country, that those are actually the best incented party in healthcare to drive innovation, because they do want to keep costs down, but they also want people to be healthy, happy, and productive, and excited about coming to work and able to do their best work every day. So if you could find companies that are willing to invest in healthcare with the mentality of, we want to keep our overall costs down, but we also want to improve outcomes and make sure that people are healthy and happy and have, a good product experience with healthcare, which is hard to find. Let's go build for them. And so we rebuilt the tech stack and the service offering for self-insured employers. And so another little known fact, it's known in the healthcare industry, but it's not known outside of, is that if you have more than 500 employees at your company, you're most likely self-insured. You're not going out and buying insurance. You might get some reinsurance on the back end to cover catastrophic loss, but you're generally off your balance sheet paying for your employees' health insurance, because it's such a big pool of employees that you guys can actually underwrite that pretty well yourself and pay for it and save a lot of the administrative costs of paying for insurance to do that. So the vast majority, 90% of companies with more than 500 employees self-insure, and there was no real good tools for that. So we rebuilt that. I did that for a number of years out in the Bay Area before we moved back east. Really enjoyed that. I joined another company in the real estate space and took that through acquisition when I got out here. That was fun, but it was a much smaller market. We're building software for real estate agents, kind of early days machine learning, with the idea that if you could predict, based on all the data that you can get on homes and properties and people in the U.S., you can predict who is going to sell their home in the next 6 to 12 months pretty accurately, and then find a way to productize that for real estate agents so they know where their next deal is coming from, which is usually from their personal network. So we would pull all their phone numbers in, all their contacts, and we'd say, hey, here's the 10 people you should call. Here's the 5 people you should call. Here's the 100 people you should call this year to win more deals. Sold that to Remax and realized that it was fun to build a product that agents loved. It was not a big problem for the world to help real estate agents win more deals from their existing network. So part of the reason that me and my CEO at the time, who's now my co-founder, pulled out of that company was because we're really looking for that bigger itch to solve a big problem in the country. I had found that with healthcare, really hard industry, really complicated, really heavily regulated, but we found a way to provide some value. I wanted to do that again in real estate, recognizing that this is probably said so much that you get tired of hearing it. That the 3 industries that really have been immune to disruption in this country are healthcare, housing, and education, right? For whatever reason. And so, I looked at healthcare, I got knee deep in that, and I think we made a positive impact there. And sitting in real estate, I was like, okay, let's go focus on housing. How do we drive down the cost of housing? Because here's another industry where you see costs far outstripping median income growth in this country. And so a broader portion of the population is feeling like either homeownership is out of reach or homeownership is such a burden that they're not able to pursue the careers or the lives that they want to pursue. The old rule of thumb, this is really the kind of crux of why we started Acre, but the old rule of thumb is don't spend more than 3 times your annual income on your home. And if you look around the U.S. today, you'd be hard pressed to find a market where you could spend 3 times your annual income and get a home, especially your starter home, or look at median incomes and median homes. It just doesn't exist. You're looking at markets like you live in, where it's like 10 times your annual income to afford a home. The Bay Area, when I was there, it was 10, 11 times your annual income. And even if you moved out to the fringes, you're looking at 7, 8, 9 times your annual income to purchase your home. And when we moved back east to North Carolina, it was more reasonable, but we've seen the home prices accelerating as well out here, and that outstripping median income growth. And so, what that really does is it takes a tremendous amount of debt and puts it on the family's balance sheet, which stifles their ability to kind of move, change careers, and have the lives that they want to live in the right place for them at the right time. Also, at a time when we see the average American family is changing jobs more often. So, as we know, millennials, I think, stay in their jobs an average of 2-point-something years, versus, the generation before would be in their jobs, 5+ to 10 years. So we're seeing this desire to shift companies and jobs and locations in order to have the career you want. I'm also a big fan of entrepreneurship, and the idea that you'd have all that debt just takes away your ability to take any risks as a family or as a individual. And I felt this particularly when I got out of grad school, and I was out there before I started building companies. I worked for a law firm for a hot minute to pay off student loans, and I was making 3 times what I made in the Army. And I thought, okay, we made it. Like, I never thought I'd make this much money in my life as a lowly law firm associate, and so let's go buy our first home. And you could imagine my shock when I filtered by Zillow of what I could afford, and it was like 0 homes because I was in the Bay Area of California. And I went out to the VA, and they gave me the super jumbo loan. I remember it wasn't just a jumbo loan; it's a super jumbo loan. And they said, your max super jumbo loan is $750K. Of course, you filter in Palo Alto, Menlo Park by that, and you can't even afford a parking lot. And that to me was very telling. And I said, I'm not going to take on and they're like, you could layer in another loan on top of this and make this work. And we could figure out a way to and I was like, if this happens, Caroline's not going to be able to leave her job. She wants to go raise the kiddos when we have kids. And I'm never going to be able to leave this law firm job and go build companies. And so we opted to rent, and we paid a boatload of money to rent. But I remember thinking specifically, if I could just buy a piece of one of these homes, somebody else can make that investment, and they, these are great assets. They were going up by 30% a year at that point in time or something. Home prices were just kicking up to the right. Somebody else could take that bet. I'd be happy to come in and buy a piece and let them buy the rest. I'll take good care of it. I'd be happy to pay them rent for their portion of the home. And that's where the seed for Acre was planted. The idea that maybe there's a better way actually to finance homes that fits the way people live. So we're not necessarily tackling the big, affordability problem that a lot of companies are flowing into, and they're doing great work around people that couldn't otherwise get a mortgage. Our average customer could get a mortgage, but it's not necessarily the best financial decision for them. And it's becoming more and more burdensome. And so we do have some folks that this is the first time purchasing a home where this is really an unlock for them because we can bring down the monthly payment and make this affordable. But we also have a lot of folks coming to our platform where they have owned a home before, where they have equity, where they have assets, but they know that the veneer of the forever home, the myth of the forever home has been ripped off, and they're like, we know we're only going to live here for 3 to 5 years. So taking on all that debt and paying all the transaction costs, 6% on the back end just to real estate agents to sell the home, add in all the loan origination costs, add in all the inspections and fees. It just doesn't seem like a great financial outcome. And it actually isn't. It doesn't pencil out over 3 years compared to what we're offering. This just seems like a better financial product. So I think that the real value that we're adding to the world is the willingness to do something disruptive in a space that will not self-disrupt, if that makes sense. The incumbents, when it comes to lending for home buying, make a lot of money. There's a lot of people along the value chain, from loan originators to banks to real estate agents to inspectors. that make a ton of money in purchasing that home. There's only one party that yields the risks of home buying, and it's the individual and the families that are buying those homes. So the individual and families are taking on all the risk, but all these people are making a tremendous amount of money. And why would they disrupt that? There's trillions of dollars of loans originated across the U.S. Even in this kind of down market, there's tons of activity going on. Banks are making a ton of money on these higher interest rates. Why would they self-disrupt and come with a better financial product for folks? And so the opportunity to come in and say, what if we think about a different capital stack for buying a home? What if we brought in folks that do want to participate? That's the other side of this equation. There's $110 billion earmarked to buy single family homes and turn them into rentals in the next few years. And they're out there buying, you see the headlines of Invitation Homes and others buying up all these single family homes, flipping them into rentals. How do we take that money and allow it to invest into single family homes without boxing out more and more of the inventory of homes from a true sense of home ownership in the community? And so Acre, really helps solve that problem as well on the investor side, in that a lot of these folks don't want to do that. They don't want the headline risk of doing that. They actually really do believe in the American dream, and that people should have a sense of ownership in their home. They also recognize that when people have a true sense of ownership in their home, they take better care of it. They're willing to invest more into their home. They're willing to invest in their communities. They have better health outcomes. They have better educational outcomes. And so how do we allow this money to come in and allow people to live the ways they want to do? The two big shifts, institutional money after the great financial crisis coming in to pick up single family homes, and people wanting to move more frequently, take on less debt. And how do we marry those things into a product that serves both parties because it aligns their incentives? And that's really where Acre, came out of. And I'm happy to get into the actual details of how it works, but I'm going to pause and let you ask me questions.
Yeah, no, I appreciate you going through that, because it's helpful to hear your origin story and how you came to it. Because I feel like what you experienced as a young, highly paid individual in America, if you want to compare it to medians, is sadly true of many, many families. And to your point about the median, the old days of 3x your income, the median American family makes $50,000 and the median home is over 400. So we're not even close to 3x, no. Statistically. There are some markets where you are, but it's become increasingly out of reach.
And those aren't the markets they're priced for a reason, right? It's not necessarily where you want to hunker down with your family. You want to go where the jobs are, where the opportunities are, and where you find those, you tend to find higher price points on homes. And so you're putting yourself into a market where you're just, and we talk about debt being bad. Some debt is good, but a tremendous amount of debt is risky, and we're putting a lot of risk on people's families.
Yeah. And I think there's just another point to follow up from your earlier remarks that I don't want to lose before, as we get into the details of Acre, is there's a sense in which housing has become sort of like a Hunger Games asset, in the sense that if you are in a market like mine, like LA, and you become a homeowner, you end up in a way better financial position than you would had you not owned a home, because of this crazy dynamic where there's supply constraint and the prices just keep going up. And there's a whole bunch of reasons, and that's not the purpose of this episode. We can get into that. But what people don't understand is that that's actually not true in many, many markets in America. The idea that you can just buy a home and then all of a sudden you're going to be able to flip it and make hundreds of thousands of dollars, that's actually statistically not true in the vast majority of America, and is why people got in real trouble during the great financial crisis, 15 years ago. And it's why the Acre product, which I want you to sort of describe for us now, is an answer to that question in many ways. It's an answer to the question of, changing lifestyles and a new financial product for people to consider with homes. But it's also an answer to the question of what do you do if you want to live in a market where it's actually functioning in a sense, where there's new supply coming online and people are building homes. And so the price of the homes don't go up and up and up like they do in an LA or a San Francisco. So why don't you tell us how the Acre product is structured and how it relieves those pain points?
Great. I'll tell you from the point of view of a consumer, right? So it tends to be our customers are high intent. They're looking to buy a home, and they're usually working with a real estate agent in the out market, and the real estate agent will talk to them and find out they're only going to, they're having some hesitation. They might, have some sticker shock around home prices, or they might be saying, hey, we're only going to be living here for 3 or 4 years, or we might probably going to have to trade up when we have another kid. And they're just having this general fear, uncertainty, and doubt that comes with home buying. I think that it's across all ages and demographics when you're making a huge purchase like that. I said, well, why don't you check out Acre? And maybe you could just Acre this home for a few years. And so, we come alongside, we'll filter all the homes that hit the market for the ones that we think are good opportunities to invest in, which generally means they're, we're not beholden to a certain price point. We have a broad range. About 82% of the price points in a market will fall within our target homes, but generally it's newer homes that aren't going to have a lot of issues that are pretty typical for a neighborhood, so we can price them correctly. So you don't want to get the one home on 3 acres in a subdivision that has half-acre lots, because we just don't know how to price that home compared to the other ones. So pretty typical. And then we're looking for good homes in good neighborhoods that are well established. We're not trying to go to the outskirts of a metropolitan area and buy up homes that we think there's going to be development here. You see a lot of build for rents popping up on the outskirts. So it's really kind of the center of where people do want to live. And so then the individual will enter into 2 agreements with us. One of them is the residency agreement. The other is their value share agreement. And then they'll put in 5% of the home value towards the purchase through this value share. And so that value share allows them to share in the appreciation of the home. And we offer 2 different products right now. One of them provides them a much lower monthly payment than a mortgage, and it allows them to share in 10% of the home's appreciation. So for 5%, you get kind of 2x leverage on your investment. We have another one that's called Boost. We're not very creative with their name, Saver and Boost. Boost allows you to get 50% of the appreciation of the home. So basically, you get for 5% into the home, you get 50% of the appreciation. Now, with a regular mortgage, as you know, you put 5%. If you can get a 5% loan, you get 100% of the appreciation of that home. But so that's the other option they have. We don't have it on our slide scales. Go get a mortgage, take on debt. You have 100% of the upside. The one difference, as you mentioned, is on the back end. There's no transaction costs for our homes. So we're going to hold the home. If they decide they want to buy it, they can. They have that option. And so they can purchase it from us after 3 years. They can extend their term beyond 3 years if they want to just continue to own this through Acre. Or they can cash out, and so we'll give them their appreciation and plus their value share back at the back end. But we're not subtracting transaction costs. So there's no point in time where that 6% comes out the back end. On the front end, there's no loan origination costs. There's none of this kind of vast array of fees that hit you when you actually buy a house that you're actually shocked on all the stuff that goes in with loan origination and other things. And so when we do the calculator, they end up over 3 to 5 years, even with pretty substantial, appreciation modeled into our model, in a better financial position than they would have if they purchased the home, because it's really hard to overcome those fees. But if they're going to live in that home for 20 years, a mortgage is still a better option, because if you have 100% of the appreciation of a home over 20 years, in most every market, it's going to move up to the right? Over the longer time horizon, it's a great asset to be in. But over a short time horizon, you're absolutely right that there's no necessary guarantee that singular asset that you're putting all of your eggs into is going to appreciate. And so this wasn't a big selling point for us prior to interest rates kind of ticking up and people being very nervous about home values. But we do find customers coming to us, residents coming to us, and saying, okay, what happens in this scenario where the home doesn't appreciate over 3 years, where I buy it for $400,000 and I leave and it's $400,000. With a traditional mortgage, with all those fees, you actually are losing money over that course of time. In the other environment, what if that home value goes down by 10% and you put 5% in? You actually owe the bank money on the way out, plus all the fees to sell the home, which is where people really got stuck in the great financial crisis, is that they bought a home, took on a lot of leverage, home values went down, and now it actually costs them money to leave that home. And that's where people were walking away and handing over the keys to the bank, which is not a great outcome for the banks. It's not a great outcome for the individuals, obviously, but it's probably the worst outcome possible for the bank, because now they don't have someone in there making monthly payments. They don't have someone in there taking care of that home, and they have to quickly figure out, how do I And this is where you ended up with, people going to the courthouse steps and just buying up homes at pennies on the dollar. And it's also the great financial crisis is one of the reasons why we're, millions, depends on who you talk to, just underbuilt in home building in the United States, because that took a sledgehammer to our builders and other folks in the industry that are very finicky about, starting new homes without having clear line of sight on demand, because a lot of those companies went bankrupt.
Hey guys, this is Nick. I wanted to take a quick break from the episode to share some exciting news. In addition to the podcast, I want to make you aware of some additional content we're putting out. And best of all, it's 100% free. Our Profit Plus newsletter consists of weekly insights about what it takes to find meaning in the pursuit of modern success. This is the place where we explore big ideas at the intersection of markets, business, politics, and life, as we seek to empower our readers to have an authentic impact on the world. If you're serious about finding fulfillment amid success, then definitely check out these additional insights. Just go to subscribe.nickhalaris.com. Again, that's subscribe.nickhalaris.com. Now let's get back to the episode. Yeah, so the Acre product, the two products, the Saver product is essentially, it would give a person interested in buying a home who doesn't want to take the risk of getting the 30-year mortgage an opportunity to basically buy the home or buy a piece of the home, but live in it, pay some portion of rent to you all, and invest 5% of the deal. And so what happens, how does it work? Like, let's say the property does lose money over that time period. What is the sharing agreement between you all and the buyer, or the renter/buyer?
So let's take a $500,000 home, right? That's easy math. And you put in 5%, which is $25K. Let's talk about the happy scenario first, and we'll talk about the downsides. Happy scenario, the home value goes up. And goes up from $500,000 to $600,000 over the course of time you're there, which is not out of bounds for what might happen. If you do the boost product, which is you get 50% appreciation, when you cash out at the end, you get your $25,000 back plus 50% of the upside, so plus $50,000. So you walk away with $75,000, which is fantastic, right? Because now you've increased your equity, you've jumped on the equity ladder, and you have a bigger down payment for a bigger home. You can do something with that money. On the scenario where it actually goes down, so say it goes down 10%, right? So it goes from $500,000. It goes down 10% of $500,000 is $50,000. So it goes down to $450,000, right? In a traditional scenario, you would now, since you had $25,000 in with a bank, that equity would be wiped out, and you'd owe the bank $25,000 plus all your real estate fees to leave that home. With Acre, you only lose 10% of your $25,000. So you still lose some money. You lose $2,500, right? But it's a much better situation where you're still getting money back at the end of the day, even though the home value's gone down. And so when people look at that, it does feel like it's like, oh, this is a tremendous amount of upside with a kind of a capped downside. You don't have 100% of the home value as your downside. You'd only have the 25 that you put in, and only a portion of that. I think that's a really tremendous value over that short time horizon for the residents. We, of course, the investors that come in aren't going to sell it right then, because no one wants to sell at a loss. They're going to hold it and wait for it to recover before we liquidate that asset. So we're happy to take a little bit more risk, which is what they're doing. They're risk seeking. This is a portion of a portfolio of investments versus that individual family's, a lot of families' sole investment is that home. And now you're talking about just a big bet on a single asset, which we know from, growing up and being told to diversify our whole lives, it's probably not a great thing to do. It's good to invest in your home. It's good for your communities. It's a good place to park some money. And a mortgage is actually a great instrument for folks to, in most times, acquire debt at a very low interest rate, and should be taken advantage of. But it's also a big risky bet when you get that asset price gets really, really high.
Definitely. And I like your focus on this transaction cost, because I don't think people understand the extent to which these costs like eat up the potential profit that you have in a house, even like a house flip. Like, there's no industry in the world where people are trading financial assets like a house or piece of real estate and paying 10% to make the transaction happen. Commissions on stocks are basically zero in the modern era. And you can trade like a $2 trillion company and pay almost nothing to do it. Maybe you're getting ripped off by Robinhood in some other way, but there's no more commissions in that business. And actually, I don't know if you're aware of this, but there's a lawsuit. I think it's a DOJ initiated lawsuit right now against the real estate industry and against this 5-6% commission, which is really interesting because I've always felt like that's the most obviously wrong price besides maybe healthcare, like the first business you started. That's the most obviously wrong price in our whole economy because, man, 5-6% to sell a house is crazy. It should be like 1% or something.
Everybody thought that the real estate agent was going to go the same way as the travel agent when the internet came out. And we were actually, I was selling software to real estate agents, and we had every venture capitalist would say, isn't the real estate agent going away? And we would look at, there was actually, the percentage of people buying a home with real estate agents since 2001 had actually gone up. And I don't know the exact statistics, but it was like from 85% of people to 95% of people using a real estate agent over the same course of time. That the percent of people that use the travel agents basically went down to zero, unless you're planning some major, super swanky vacation and need a travel agent, or you're going to Disney World. Apparently everybody needs their travel agent when they go to Disney World to help them maximize their time. So, I think part of that is driven by the fact that we don't buy or sell homes as often as we travel. And so you do feel like you need a trusted advisor. And part of it, and also part of it is because people don't understand the economics of the transaction and really what that 1% to 2% entails, because there are models out there, Redfin and others, that try to come after the price of commissions, and it hasn't stuck for some reason. I think also one factor that leads into this, I think the second largest lobbying group in the U.S. besides the NRA is the NAR, which is the National Association of Realtors. So there might be a little bit of regulatory capture here. I'm actually personally a big fan of a good real estate agent. I think they earn their commission because they're helping you navigate this really important considered purchase in a very stressful environment. And they're the one party in that transaction that's probably going to be a repeat player with you, and therefore it does care about your experience, and they smooth out the really rough edges of this process. I compare that to the banks that are loaning you money. I had banked with my bank when I bought my first home since I was 17. They had every single paycheck, every single insurance dollar, every single investment dollar, all of my wallet from when I was 17 to when I was 30 something about our first home. And it was a no-brainer. I was going to get my mortgage through them. And it was like they never met me. I had to write all these memos describing all these things that were, and I felt like the whole thing was going to fall apart, even though I was I had plenty of income and I had plenty of assets to go purchase this house. Tons of stress. Kind of like the Disney World ride where you keep going around a corner and then they have another line waiting for you. And then after I closed on my loan, they sold it off within a week to some other third-party servicing company. And so the whole purpose of me going through this bank was because I trusted their brand and I wanted them to service my loan. And they just sold it off after treating me like dirt. And since then, I've pretty much abandoned the bank. I just said, okay, I'm done with them. But that's just the nature of the beast here. You are not actually the customer for them. The bank they're going to sell your loan off to is the customer. And so therefore, it's all about pushing you through this process and checking a bunch of boxes. It really makes the process of getting a mortgage a miserable consumer experience. So, our two North Stars for building this company, where it has to be a better financial outcome for folks than a more traditional mortgage if they're going to buy a home. And it has to be a 10 times better experience. And the 10 times better experience is actually not that hard to do. If you just kind of make all the fees transparent, we're buying the properties all cash, and then we're doing a little bit of upfit. So it's nice when the people move in and we're handling any of the issues, and then we're getting them 2 weeks to close and they're in the house that we had one family that was looking at renting in this neighborhood. And they weren't actually going to be able to get into the home they wanted to before the start of the school year. And with Acre, they came in, they met us on a Friday. We had an offer out. They found the home they loved that weekend. We had an offer out that next Monday, and we had it closed by Wednesday, or had the offer accepted that week, and we had them in the home in 2 weeks. And so they actually could get in the home quicker buying it with Acre or through Acre than they would have if they rented it, which is pretty cool.
That's very cool. Yeah, I feel like you guys are addressing like so many different pain points all at once. And it really is a different outcome and a better outcome than what Wall Street has been pursuing for, 15 years with the build to rent or buy to rent kind of strategy, which is producing good returns. And it, maybe it makes sense for a stock of homes across the country to be available for rent. Maybe there's a case for that.
If you're living in a home for a year, maybe that's where I would differentiate. If you're only going to be there for a year or so, maybe you can live in one of these build to rent communities. But it's just, and I think that there's just a little bit more risk from an investment standpoint, actually. If you're looking at it through the investor lens of going to build something from the ground up and then hoping to lease it up at some point in time versus you have a tenant in tow, basically, when you're doing Acre. We're going and buying great homes with someone that wants to live there that signs a 3-year agreement. So I think for investors, it's actually a better situation. And for the consumer, it's a better situation. And one of the interesting things we found, Nick, is as interest rates have gone up, I think we talked about this a little bit, homes were already unaffordable and now you're making them extra unaffordable for folks. Our cost of capital obviously goes up as well. So everybody's lent. It's not just the individuals. People have to realize that when interest rates goes up, it's not just individuals trying to buy homes and student loans and those other things. It's also folks that are trying to invest and layer in some debt on the back end of their investment. So you're stifling all this economic activity. And where it used to maybe pencil to go do a build for rent, because rents don't necessarily move perfectly with interest rates, right? It basically stops all of this development. People go, I can't actually make this pencil. I can't rent this out for enough to be able to do this project. So we have this problem of not enough supply of homes, and then we're going to see more folks not investing in building homes for rent and building multifamily units and other things because of the high cost of capital. I think one of the advantages that we have is that when a consumer comes to our site, they compare what the fully loaded mortgage cost would be to what Acre's cost would be. And structurally, because of the way we fund these things and bring investment, we're always going to be lower than the mortgage cost, right? And so we show them that, hey, here's how much you save versus a mortgage. But that has gone, unfortunately for our consumers, it has gone up. So our cost of capital has gone up. So it's still a solid discount from a mortgage, but it's more expensive than it was a couple of years ago, which is unfortunate. But you can still get into a great home. You can save some money. And the good news is, if you come with Acre, you also have the right to buy that home. So fingers crossed, knock on wood, when we get. And you probably have other podcasts talking about the probability of this. If interest rates do come back down, you could always buy it with that cheaper rate in a couple of years, which is which we found has drawn a lot of people towards Acre, saying, I would love that house. We need to get there. Our kids need to get in that school. I don't want to take on this 8%. People are looking at 8.5% mortgages, which is insane. I just want to get into that house. This is a cheaper way to do it. And so we're getting there for a few years. And then in 3 years, if we decide we want to live here, we'll go get a mortgage. And if not, we're not penalized. We don't have to pay 6% to go find that next great house in the neighborhood. Maybe because we have another kid, maybe because our kids graduate from school, maybe because we just decide we want to live closer to downtown or closer to the mountains, so it gives people some flexibility.
Totally. How do you establish the price for the consumer? So let's say they sign this 3-year deal. They're in the Saver program, so they own 5% of it, and the house was that $500,000 house. What's the price in year 3?
The way we do it, kind of our backstop, is we look at what the total cost to buy that home, to take out a mortgage, pay the taxes and insurance on the home, and we put that on the website. We make it really transparent, and then we'll offer the boost is a discount to that, and then the Saver is a substantial discount to that price. And I can't tell you the exact percentages, but I think it's like 10 to 20% discount for the Saver, and then 5 to 10% for the boost. But you can go look at the site right now and look at all the homes in Raleigh Durham that we have pre-approved. We don't own these homes, and it'll just list up front, here's what you pay on a monthly basis. Here's what your value share would cost. Here's what you would be able to get with a mortgage if you could get the prime mortgage rate. What we do find is that people a lot of people that come to our site, we'd let them actually plug in their own mortgage rate to get a sense of what their fully loaded mortgage payment would be, because they'll come in and say the prime rate's at 6.5% or 7.5%, but they'll get quoted at 8.5% mortgage, or they'll be given a 7.5%, but have a bunch of points that they have to put on to get there. Like there's this whole, it's not the most transparent way that you get into a mortgage, right? And so we try to make very transparent. Like if you actually think about it, your monthly payment will be taxes, it'll be insurance, it'll be your principal, and it'll be your interest payment. That's what's going out the door is your family balance sheet. Acre is going to be cheaper than that. But yeah, if folks are listening to the podcast, if they're interested, can go check it out at acrehomes.com. And we actually have a calculator in there too, where you can mess around with interest rates and see how much you would save. And you can also plug in your assumptions on different things like appreciation and figure out where, if you're really bullish on appreciation, if you're actually taking a bet on this home, you might want to take out a mortgage and take that 100% of the upside, which is fine, but just recognize that that's a choice you're making. And now you have another choice.
Yeah, definitely. Well, very cool product. I really love to see this expand. I'm pulling for you all, because I do feel like this is an innovation that is going to be useful across the country, and not just in some markets, but probably in all markets. So tell us where you are now. Like what is Acre up to? What's the scale, and what's your vision over the next 12 to 24 months?
Yeah, right now we're just solely operating in Raleigh, Durham. It's our initial market. We kicked out our pilot homes and we're building on top of that. So we proved that people wanted to do it. Our goal is to have 25 families and homes by the end of the year. So every weekend we bring in one or two new residents. And then next year we are going to be expanding likely to Atlanta and possibly to Dallas. So just getting broader into a couple other markets. The goal next year is to get to that 100 to 200 home kind of target. So we're kind of growing slow, deploying capital responsibly, and really proving to our investors that this thing scales up nicely, and that we're able to continue to deliver these great yields and this really kind of positive behavior from our Acre residents who are taking great care of these properties. So the goal then, of course, is once you hit that threshold to try to court larger pools of capital. So this is, again, get to a couple hundred homes, prove that the model works in multiple markets and at scale. And then you go to the larger institutions that do want to invest in U.S. residential or bullish on it, but might be a little gun shy from headline risk, and say, hey, you can invest. There's another angle to get into single family, actually higher yields than you'd get on a built for rent with less risk. And why don't you come in and join us in that journey? And so the hope ultimately is to get this thing to be a brand name in the United States, at least for now, get to tens of thousands of homes, build a great company and a great culture along the way. And
nice.
It doesn't sound like that big when you think about consumer products to get to 10,000 to 20,000 homes, but that's $100 million in recurring revenue at that kind of scale, which is a good sized business and gives you a lot of options.
Yeah, absolutely. And two follow-up questions. On the other side of this business, there's investors, right? So you've got to on the Acre side, you've got to come up with the capital structure to actually buy these houses that the consumers want. What kind of yields are you getting right now? Like you said, they're looking better than the build to rent. I'm curious what you're getting.
So the way it pencils out is we're about 100 basis points over the consumer mortgage because we bring in less debt and we kind of do an interest only structure. And we can also have a lot of Costco effects when it comes to insurance and other costs. So we just had a home that went under a contract at an 8.5% yield. And then before that, we had homes at like the 7. So we set our targets kind of 7.5, 7 to 8% yield. And then our overall kind of return profile was we make some assumptions. We pick markets we think are going to appreciate over the next 10 years. And so overall with leverage, we get to about 17, high teens IRR, which is, in my mind, a pretty solid return in a real estate asset, because as we know, the downside of that is not you're wiped out like in venture. The downside is you're still getting a cash return, and you're probably able to have some appreciation over that portion of time in your asset. Yeah,
totally. And yeah, 7-8%. Just the yield itself is very competitive. I mean, we've been tracking the cap rates in multifamily because that's sort of my day job, and And you're hard pressed to find anything close, even in this environment where there's a ton of stress out there. It's hard to find an asset that you'd actually want to own that is yielding on paper something like 7 or 8. So that's a very compelling return.
Yeah, it's interesting in that I don't know the why that the rents haven't scaled up with costs, but I imagine it's just there's kind of a first mover problem, right? Where your costs are going up. You have your tenants are under a contract, but also some folks are not financially savvy enough to think about supply and demand when it comes to how they're pricing those units. But you do see that rents don't track in a way that is they might even go down as interest rates go. It's just a weird, it's hard to say why they haven't gone up. And where people are seeking yields, there also is a crowding effect. So there's less inventory, which means that if you want to go buy single family homes and flip them into rentals, you're generally focused on the lower quartile of homes. And when it comes to price point. And so then you end up inflating that price point a little bit, and it's hard to get the yields that you want. So you have a lot of investors competing for a limited supply of assets. You have less people building those multifamily units, but they're doing it based on, assumptions on what they will be able to rent that out at in X number of years, which is a big risky bet when you don't know where rents are going to be, because you're not bringing residents in tow. You're not bringing a tenant in tow. I scratch my head a little bit. You might know more. You probably, Nick, I should be asking you this question of why those yields haven't gone up on those properties. But I scratch my head about why you don't see those go up as well as when the cost of capital goes up. But I imagine there's just some lag. And there's probably a supply and demand issue where a lot of people are shifting from commercial and maybe pushing into multifamily, and there might be some overbuilt in multifamily in and around LA and other markets.
Yeah, I'm not 100% sure that the answer, but I think it's a function of a similar dynamic that we're seeing in housing, in the sense that multifamily rents also went parabolic in COVID. And so some markets, like even some of the markets like you all are interested in, they were like 20% a year. And so I think there's actually a component of exhaustion. Like prices just got too high, especially when you start to like look at people's actual income. And so even though there's still underlying, I really believe there's still quite a bit of underlying inflationary pressure in residential and multifamily real estate because of the broken supply function in the country. The reason it doesn't accelerate in an environment like this is that household formation decisions get kicked down the road. And so
you go back to the parents, you're like, I could go rent, exactly, or I could just go to the basement and just,
or roommates that were going to break apart, that we're going to live separately. They just stay together. Like it just messes up with the household formation while there's all this uncertainty. And then we'll have to see that uncertainty resolve before household formation kind of gets back on trend.
Yeah, which is another reason. Solid, strong households are important. We need that. So let's get things back on track.
I totally agree. Well, I am super excited about Acre and looking forward to keeping track of your work. One of the things that strikes me, in the conversations we had before this and even just now in the last 45 minutes is you are a person, an entrepreneur who is concerned about something that is kind of inspiring for me, which is the status of our country. And so you had a deliberateness about the things that you got into. And the more I'm getting into this podcasting and the more people I talk to and try to invite to the show, the more I'm realizing that there's a new category of entrepreneur out there that I'm calling like a civic entrepreneur, that are pursuing business models because there's something broken about the business, like housing, for example. I mean, we could have a 5-hour discussion about why housing is broken just from business, but it also relates back to the status of our democracy and the direction of America. And I think that's noble, and I'm really supportive of the idea, because if you could have a business be a force for good for the country and be profitable, like that's the goal, in my opinion.
Yeah, I couldn't agree more. I think that, we beat up on capitalism a lot in this country, but sometimes it's helpful to step back and say, capitalism in its true sense is just trying to be an efficient way to apply capital to the right problems that are going to produce the best results. And it can get perverted in a lot of different ways. And I think that in the industries that I'm focusing in on right now, it just happens that, we talked before about negative externalities when it comes to, extraction of natural resources and polluting the environment and other things that can, if the company making the product is not absorbing all of the negative effects that they're doing to the world, then it's not truly optimal, right? But if you look at healthcare, if you look at housing and real estate, and you look at education, a lot of the problems are problems of incentives and problems of regulatory capture. And kind of those two things combined is creating bad incentives, which creates bad behavior or creates bureaucratic bloat or extra processes that don't actually make sense. Maybe they have the best intentions, but they don't actually deliver the right results as consequences. And so I think part of my passion is not just build things that we need, because I think there's a lot of ways to go about that. I think it's show the world that with innovation you can outperform this desire to have other folks that don't have the right incentives solve your problems. So I'm very much I think that our capitalist kind of free market mentality can really be a force for good, even though it gets demonized a lot. And to show people that, let's go build a great company and let's fix housing with innovation, not with regulation. Let's fix healthcare with innovation, not with more regulation. Because I also just see how the incumbents have so much regulatory capture in the way that the laws are written. They write the laws and hand them off in some instances, and they end up entrenching into our economy the business models at that point in time that support them. Which, in the case of healthcare, it's the best ideas from 2010 are kind of enshrined in our law, because that's when the Affordable Care Act was crafted and put in place. That sticks us in 2010. It's like going to Tomorrowland at Disney World. You kind of get a sense of what we thought the future would be, how we thought healthcare should be. None of that contemplates the advent of new tools, technologies, artificial intelligence, and other things that might actually fundamentally increase our lifespan or drive down healthcare costs. And it's really hard to overturn legislation like that. So I think it's a big burden to have, have, even with the best intentions, folks codify a lot of these things in a law that should be left to be figured out by smart folks that have the right intention, just making sure that they have the right incentives and they're owning their externalities in the process. But that's where I stand. I'm probably different than a lot of folks that come on your podcast, but that's just my general perspective on these things.
Yeah. I mean, in intentionality, you're not different at all. I think maybe this podcast is skewed a little bit more left in the sense that many of the people would be in favor of regulation or would think first about regulation. But I know, because I know almost everyone who went on here very personally, I know that everyone, even if that's their baseline, if they sat down with us and talked about how business could play a role, they would absolutely be interested, and they would be able to see through that. So I believe that the business's problem is that it hasn't been talking in the terms that you and I just talked about for a few minutes about, hey, how can we be a force for good? How can we change the incentive structure so that it's not just capture and making the most profit, but we have a mission here. We're trying to actually do something to improve this industry in order to improve the country. But business doesn't talk like that.
I think also a lot of business, the way we think about business is the same way I thought about business when I was getting out of the Army, which is like, these are these giant companies that are soulless, and they're driven for profit, and they're going to crush the little guy, right? It's all the villains from the 1980s movies, with RoboCop and other things, were just like these massive companies that are just soulless and going to lead us down the wrong path. And I do actually think there's danger in when companies do get to a certain size, they kind of take on a life of their own. And that's where you see a lot of the regulatory capture. That's where you see a lot of the incumbents suing the upstarts to try to prevent them from disrupting their business models, and using the power of government against, we have our companies using the power of government against against the innovators in our economy. And I think that's a pretty consistent theme that if you look out, you'll see that across the board. And it's funny how quickly these innovative companies will switch and realize that now they have the resources and they have the access, and they're going to use that as a competitive moat against the next guys trying to do the same thing that they did. It's kind of an American tradition to do that, though not necessarily a great one. And we should be pessimistic about, and we should be critical, and we should hold our corporations to account But we also should recognize that when we push for legislation, when we push for regulation, that we're not just handing the keys to the same people that we're trying to regulate and asking them to write it, which we have a tendency to do as well in this country.
It's such a great point. And actually reminds me of something else that I've been picking up on recently. Like there's a bunch of technologists, many of them on the right, like most famously Peter Thiel, who's been going around on a speaking tour of sorts, or at least that's what it appears like on Twitter, X, whatever it's called now.
We'll never get that one right again.
I know, I keep messing it up. But what's interesting about it is that Peter, unlike many people in that industry, is not shy about what they're actually doing. Because he's basically going around giving talks. He's like, we are trying to make monopolies. That's what we're doing in Silicon Valley. When we look at these companies and we evaluate them, we're not trying to outcompete somebody or do something. We are trying to design a business that will be a monopoly. And so I respect him for telling the truth. Now, what do we do about that? Like, he doesn't seem to, I haven't heard any of the clips where he's offering like, okay, if you build a monopoly, like when is too much? When is it too much? Like, when do we start thinking about like, okay, Google and Facebook, like you have too much power and control over our culture. Like we need to regulate you. I haven't heard his answer to that, but I think it's so interesting that he's being intellectually honest about what Silicon Valley is pursuing, at least at the level that he's operating at.
Yeah, I don't know the answer to that question, because I think that monopoly is one of these things where we also just have an aversion to and say, oh, that's bad, because I learned about that when I was in grade school, and I know that that's bad. And why is monopoly powers bad? Generally, antitrust suits are come after these companies because they hurt the consumer, right? They squeeze the little guy and they drive up prices. So you own all the railroads, and then you start charging people way too much, and you become you're sucking out resources that you don't deserve. But no one else can build a railroad because it doesn't make sense to do that again, right? What I think is interesting and phenomenon in our kind of lifetimes is we see these larger companies that acquire a ton of power, realizing that they actually maintain their ability to compete and to hold on to the monopoly by putting value back in the hands of consumers. So if you think about Amazon, for example, famously trying to make sure things are cheaper on Amazon and trying to drive down costs and improve their operational efficiency so that they can make things less expensive, and purposely trying not to have high margin products because they know that invites competition. So let's operate where there's lower margin here so that we can keep competition at bay, but let's hand a lot of that back to the consumer. And that just is a different dynamic that I think we're trying to deal with, of saying, wait a second, this is not the same force where we're being squeezed as consumers. I think Amazon might be squeezing some of these companies. I don't know. I don't know any of these small businesses that try to sell through Amazon. So there might be some of that going on. But I think that we're seeing the emergence of this kind of new desire to break these things up because they have different types of power than the power that we don't like in the hands of a large corporation. And that's a whole different discussion around the power of information, the power of control, the power of driving consumer sentiment, the power of kind of taking over the town square, and then that people get really uncomfortable with. Again, maybe not the same monopolistic kind of problems we had in yesteryear, because it does seem like there's avenues for people to vote with their feet and go to different forums to get their content, and different forums to get their news, or to communicate with their friends and family members. I think that we're still figuring all that out. It's a really interesting world.
Let's take a quick break to hear from our sponsor. This episode of the Nick Halaris Show is brought to you by Metros Capital. If you're an investor looking for direct access to real estate investments, then we'd love to talk with you. Investment opportunities at Metros Capital balance financial returns and community impact. To learn more, contact us at metros.nickhalaris.com. Again, that's metros.nickhalaris.com. Now let's get back to the episode. Yeah, it's such a great point. Like, the way in which monopoly is manifesting out of these tech companies is actually quite different. You're right about than the old industrial revolution version of monopoly. And it's confusing. Our lawmakers are already confused. And now they're even more confused because these business models are so different. That's a great point.
We got dragged into an antitrust lawsuit at Collective Health, I think it was Cigna and Anthem were trying to merge. And Anthem pointed to Collective Health and said, hey, we're not being monopolistic. Look, we're agreed to partner with Collective Health over here to let them run our network. And this is all publicly available. But in the filings we later got to read, it was really interesting because they found some emails from Anthem executives that said something to the sort of, don't worry about Collective Health. If they get too big, we'll just take away their network access and steal all their technology. And I remember reading that and being like, oh, we had a great relationship with them. And these were the emails going around in the back office and, coming out in this lawsuit. And so there are within these large organizations, I've seen it firsthand, a desire to crush the upstart once they get to a certain size or scale. And sometimes it's verbalized, like you said, and sometimes it's just the incentive that people have is once there's a disruptor coming up that what can we do to use our power in the market to shut them down.
Man, that's an incredible example. And you know that if that, in that one isolated case that you were involved in, if it's happening there, it's probably happening all over the place. And it shows you like how far our culture has gone down sort of the wrong road when it comes to, having values and honor in the way in which we conduct ourselves. But it's a much bigger problem than people realize.
Yeah, it's a little more Machiavellian than people are willing to admit.
Yeah, for sure. Well, I want to end that, and we're running out of time. But there's other topics, at least two other things that I have to talk to you about, just because you've had such an interesting experience. And this moment in time, your experience is sadly once again like incredibly relevant. So we didn't talk about this at the beginning when I did my little introduction, but you're a person who also ran for Congress before starting Acre, which is interesting. And then also you served in the American military and have, real life experience with some of the, the things we're seeing in the headlines today. So I guess let's start with Congress. Like what was the motivation, and tell me briefly what that experience was like. And do you think you'll ever do it again?
Yeah. I mean, I think that, you mentioned this before. I have this strong itch for service. I love our country. I think it's the best country on the face of the planet. And I think that the noble experiment that we launched to try to build a democracy run by the people that has rights and freedoms and try to all the balancing powers that our founders put together is a worthy effort to sustain. And I come from a family of military, so it wasn't far from the tree to be serving in the military. I don't want to serve in my country in Congress. I think that as jobs go, there's probably no job that I would want to do less than to be in politics and to argue with folks and to have to, do all the things you have to do to win a seat in Congress. But I think I would be, I didn't want to stand on the sidelines anymore and complain or wish that we had some more cool heads, some more thoughtful folks that have actually built companies, done things, understood the law, and could communicate kind of clearly to the American people, maybe shape our public opinion back towards common sense around some issues. I also felt like our generation just needs to step up. I can't tell other people to do something if I'm not willing to do it myself. So I jumped in with both feet. I threw my hat in the ring to run. It was a very good experience from understanding how the world works. We did not win. We lost in the primary. Would I do it again? Absolutely. In fact, I feel more compelled to step up and serve in our current moment in time. I think that when I did step up, I kind of saw a lot of toxicity in politics. I saw a lot of things being said that I felt were untrue. I felt like we didn't have many people that actually walked the walk and built companies or understood how these markets and how these industries worked, sitting around the table, solving problems. But now I'm looking at, the situation in Ukraine. I'm looking at the situation in the Middle East, and the situation with how we've continued to spend money under the last several administrations in a way that's unsustainable in the country. And I just think we need a new generation jumping into leadership in this country to try to set things on track. And am I going to do that in the short term? Probably not. in that my family's in I say we're in a rebuilding year after the last run. It does take a lot out of you. But I'm here as a resource. I don't care what side of the political spectrum you're on. If you want to talk to someone that's done it, feel free to reach out, and I'm happy to give you my candid feedback on how to go about it and how to prepare yourself and your family and for something like that. Because it's actually pretty traumatic in the world we live in today, Nick. I ran as a Republican. You would think that I was running as the devil for a lot of folks with an R next to my name who were previously friends, family. But that's just where my political kind of, you've already talked to me. You get a sense of where I kind of sit on the spectrum. It's where I stand. But unfortunately in our country that we've become so polarized and so angry at the other side and angry at our own side that, we're so quick to demonize folks and not actually listen to them and understand the why behind what they're doing. I also, in the same sense, there's a lot of folks that reached out on both sides of the aisle. We're just proud that they knew someone that was willing to step up and do this because it is daunting. So the long story short is, if you're thinking about throwing your hat in the ring, you should do it. And I wish you the best, because of our generation, the folks listening to your podcast probably bring a lot of good perspective, and we need just good, smart people that love this country, just picking up their hand, getting ankle deep in the mess and trying to sort it out.
Yeah, man. Well said. I couldn't agree more. I feel part of my motivation actually for writing my newsletter and doing this podcast is that I feel like morally compelled to spread that message around. Like, our generation needs to step up and get involved in these debates, not just national debates, but at all levels of our system. And it doesn't even have to be politically. It could be just, helping out with your community in other ways. But our absence from that field of battle is contributing to this ridiculous polarization that we're living through. And it sounds like you had some tough experiences.
You're not going to solve any problems generating your phone and commenting on things on Twitter. Like, you're just not.
Yeah.
Or on X, whatever you want to call it. You're not actually going to solve problems. You're going to solve problems by getting to work and trying to curate solutions. I do think that I have been encouraged by, I think a lot of the polarization that we were feeling was driven from the fact that people were a product of the media that they consumed. And there was two choices. And now I feel like there's a lot of burgeoning new media popping up that's in the middle and provides people a chance to find the voice and the perspectives that they've been missing. So I just think about all the Substack folks, the folks on X, the folks on other platforms like what you're doing that have allowed people to kind of get out of the same message being spouted off on, these several news organizations over here and the same message over here that don't really kind of overlap, and they create a very, very polarized environment. I think with this burgeoning kind of new media popping up in the middle and more people getting their news from podcasts and from X and from other things that are where you can find a breadth of different opinions, I think we're going to end up in a better spot, because I think it forces people to think more rather than just say, what do we think about that? I saw the same thing on, whether it's on the left, MSNBC and the New York Times, and what all these things are saying the same thing, so it must be true. And then, or I saw it on Fox News and Newsmax, and those other things are saying these things, it must be true. There's this burgeoning group in the middle with, I love what Barry Weiss is doing at the Free Press and these other things that we're trying to here's where I obviously sit politically, but I'm going to pull in different perspectives. So I think there's hope. My take on this is, I think there's a lot of hope that our generation is going to fix this problem. And part of that is, we believe kind of a lot of what we hear and who we hang out with. And a lot of what we hang out with is, sadly, especially as you start having kids and family, it's who you're listening to on your podcast when you're walking around mowing your lawn or driving to work. Yeah,
that's right. And I'm optimistic too. I feel the same way. Like, I can tell just from the response to the work that I've been doing, but also following some of the same publications, independent publications that you mentioned, that there's actually humongous demand for reasoned discourse or civil discourse, whatever you want to call it. And there are a bunch of people who are catching on to the fact that demand is out there, and they're putting interesting work into the world. And it's another good example of why capitalism is not always, the bad guy, because these are incentive structures of a new sort of capitalistic enterprise, and the internet is actually allowing these sort of micro businesses to actually make sense, and it's producing an antidote to this crazy polarization, which is exciting.
No, it's very exciting, and it's refreshing, to be honest. It's just I don't need to read the same news article 6 times and feel like I'm getting a breadth of experience in the news. I'd rather get something a little bit more nuanced and some sense of true journalism.
Yeah, absolutely. Some rationality. Well, a topic that we sort of talked about it before we hit the record button is, I think, worth finishing on, because it's a huge issue and top of mind. And you made an interesting point in that discussion, which is like, if you take a step back for a second, this conflict that just erupted in the past week is actually not anything new, for our lifetime, because America, or the world, people in the world have been fighting in the Middle East our entire adult life. And so here we go again, obviously not to discount what's happening. It's tragic, but this is like a problem, and it's not going away, and it keeps flaring up. And you're someone who spent time, like, where did you serve in the Middle East in your time in the Army?
So I did 5.5 years in the Army. I was with the 101st Airborne, and we deployed to Southwest Baghdad, so in Iraq, from 2005 to 2006. And so you'll remember, this is kind of getting to hang out in Southwest Baghdad as an infantry officer. So we're out patrolling in Southwest Baghdad in what they called the Triangle of Death at that point in time. And it was where all the kind of Sunni were hanging out, partnering with the Al-Qaeda elements that were trying to get into Iraq. And it was a pretty hairy spot. So it was a tough deployment there, I think, on multiple fronts. One, we had a tough dug-in enemy that had buried bombs all over the place and were blowing us up everywhere we went. But we also had a political environment that had kind of come to the grips that there's no weapons of mass destruction in Iraq to note of, that we kind of came into this war on false pretenses, and we hadn't quite figured out what we wanted to do with the mess we had made. Do we want to pull out? Do we want to continue to invest more lives into the country? And my perspective on that was, I think that when we, post 9/11, I was a cadet at West Point, had a lot of clarity. I was like, oh man, I'm in the right place at the right time to serve my country. Like, all doubt was taken out of my mind. Like, I will be able to make a difference. I think a lot of people during 9/11 was like, how can I actually do something here to make a difference? Like, we just got attacked by terrorism, by terrorists blowing up the World Trade Centers and attacking the Pentagon, and what can I do to stop this? How do I fight this fight? And I think that the whole international community rallied behind us, and we made a lot of decisions that we didn't choose the harder right over the easier wrong. So we made the short-term decision. We didn't really remind ourselves that our country, our system, our values had survived 2 world wars and a Cold War against a very advanced nuclear power without sacrificing kind of our moral high ground and really anchoring in the laws of war and armed conflict. And then post 9/11, we made some decisions I felt were pulled us away from that. We justified torture. We started a war in Iraq, right? And so some people say, well, that was based on something else. It was the same kind of operating out of a sense of fear that kind of came post 9/11. We eroded freedoms at home. We held prisoners indefinitely. We did targeted killings with, killed thousands of people, in Pakistan and Afghanistan and other places around the world where we felt like they were terrorists, under multiple administrations, for decades. We got into these forever wars that people talk about. And I think that it was one of the, we'll look back on time and say, hey, what do we learn from that? And when I saw what happened in Israel, one, I think that the reason that we were so shocked by Israel's, what happened with Hamas attacking and killing all those innocent civilians in Israel is that we had a brief moment of peace in the Middle East and a brief moment of hope for the first time in that region in a very long time. And so that's why it was so shocking, is because it came on the heels of that. And I think, honestly, that's probably why the attack was orchestrated and planned, is because there were some powers, probably Iran and others, that just didn't want there to be a broader peace and the consolidation of kind of peaceful economies on their border. But that's for another discussion. But the point was, hey, there's actually a burgeoning path to peace here. And then it got ripped away from us, and that Band-Aid being ripped off. I think the Israelis felt it most strikingly, but it actually hit a lot harder than the last several conflicts in Israel in our lifetime, in that we all had hope that things were kind of starting to get normal. And we kind of gotten accustomed to that idea. And that's why it has such an emotional toll on us, is that I think the other instinct that I have, just as someone that's, I spent my early days hunting Al-Qaeda and Islamic terrorists. I have no problem with going in and eradicating a terrorist element. I do think that they're war criminals, they're terrorists, and they should be wiped out. That's my personal opinion. I do think we need to minimize human suffering. That's another fixed opinion, just like in any conflict. As the civilized countries of the world, we grow long-term strength from abiding by standing as firmly as we can on the moral high ground. I do realize that war sucks and that civilians die. Unintentionally, all the time. It's just the nature of armed conflict. But you should do your best to only target legitimate targets. And I think that knowing the Israelis, how well they are adept, and having studied kind of their rule of law and how they think about these operations, that they'll operate in the balance of international conflict for as much as they can. But I also hope that they recognize the why behind this is done. It's done to disrupt peace. The goal should be peace. The goal should be prosperity of all the people in the region. The goal should be the real way to stick a thumb in the eye of those that want to disrupt peace is to double down on the peace process, and to double down on normalizing relations, and just not let them, not let the bullies come and disrupt what you guys are trying to put together, but to box them out. And so I'm hopeful that we can get there, but the emotions are still raw. I mean, people had their friends and family members killed, and it's on both sides. I have friends that have had family members killed in Gaza. I've had friends that have family members killed in Israel. It's real. And so I think that we owe those people that have died in this conflict, and those that have died in those before, to do our best to kind of minimize more human suffering in their name. I don't think anybody would want that, and to try to drive towards a broader peace in the region. But that's a long rambling. I have a very bad habit on your podcast, Nick, of just, feel like I should be stopping and giving you brief talking points more. So you can.
No, listen, man, that was a very eloquent answer, and I appreciate you being willing to share your like raw thoughts on it. And it wasn't rambling at all. I feel like I've been writing about it this as well for the newsletter, and one of the thoughts that came to my mind immediately was what you just sort of articulated there so nicely or eloquently, is that the Americans basically showed the world how you get rid of terrorism. It doesn't ever go away, because like the potential for terrorism always exists, but you can like deal with it. Even something as crazy as what we saw in the 9/11 era, like where there was thousands upon thousands of young people who were willing to engage in that kind of activity against America and the West. But the problem, as you articulated, is that the strategy for destroying terrorism potentially makes you engage in the same kind of activity that you're supposed to be fighting against. So like the indiscriminate, like we have this drone assassination program in America that every president has used since 9/11 essentially. And you got to question that. Like, is it okay for the president of the United States to just issue an assassination order? Is that anywhere in the Constitution? And are we morally okay with that kind of activity? Like we allowed it to go on because we were afraid of terrorism. But if we take a step back, man, that's a dangerous situation, especially with the technology.
Let's put the shoe on the other foot and say, would we be okay if China or Russia or Iran was out assassinating people because they didn't like what they were saying, or they thought that they were, a threat, whatever justification. The problem is the justification of these killings. It's done. They have lawyers in the room. They're looking at evidence and they are, making a determination. So it's not just the president said, go kill X, Y, and Z. There's a judicial process behind it. But and you can read up on this. But the process is, it has some biases in that you're talking about people that are all on the same team, right? It's like the prosecutor puts together the case and then another prosecutor says, yeah, that's good. And then another one says he's guilty. Let's kill that guy, right? There's no other side of the case in these decisions. So, you end up with, we're not just killing anybody indiscriminately. There has to be some evidence and some, rationale behind this person being a combatant or being a threat to the U.S. With these drone strikes. But you can see that quickly getting eroded away with groupthink, right? Because we just understand like general psychology without a third party coming in and reviewing that. And the pushback is like, oh, we don't have enough time. We got this intel. We know this is the guy. We have the evidence stacked up. We got to take him out. And they've tried their best, to make that a process. But we went on for 10 years and did this kind of behind closed doors process. It's very opaque to the American people. Now, anybody else can do their rubber stamp process behind closed doors and say, hey, we did what you did. We set a precedent in those actions. I also talk a lot about the waterboarding. We justified, enhanced interrogation techniques, which basically let's put people in enough physical discomfort that they tell us things. That sounds a lot like torture to me and to most people. We all kind of squirmed around, and we also watched 24, whatever other show was, and thought, well, sometimes you just have to do terrible things to prevent the world from blowing up. But in the end, a lot of these yielded zero intelligence, and the downstream effect of that is that you have other stupid things because people listen to their leaders and do things that, we see things like Abu Ghraib happening. I don't think that happens in a world where we're very clear on the morality behind how we treat prisoners. I don't think you have people doing the despicable things they did there in a world where we maintained our moral high ground and we create no gray area for how we treat our prisoners. And so I think that we have paid the consequences of those actions, and we will continue. But I don't think, and in no way in mind do I think that the people that were doing those things, at least the target killing everything else, I think that they're great. They're great people that have the best intentions, but the long-term effects of that kind of moral slippery slope has negative consequences in the international community, and negative consequences in ultimately achieving your objective of a sustained peace. It feels good in the moment. It feels necessary in the moment, but leaders can maintain a moral high ground even in stress and find other avenues to achieve the objectives of the United States, have other avenues towards peace and deterrence of terrorism. Leaders say, I understand the constraints, but how might we make this work? This is the same thing in business as it is in any organization. How might we make this work without sacrificing our values? Let's come up with other ideas. And sometimes, I always tell people there's power in the word no, because it forces people to look down other avenues for success. No, we will not do that. How might we still make this work? I think that that's what our generation owes the world and our country, is to kind of help us redraw those lines and to ask the question, how might we, right? How might we do this better? How might we find a way? Because I think that's important. This is a stupid analogy, but I always talk about this when I talk to my companies about how might we. One of my co-founder, actually, I'm stealing the story from him. He just talks about, there's an old video of a teacher coming to a class, and they showed a picture of a guy in a wheelchair and said, can this guy drive a car? And the kindergartners go, no, he can't drive a car. And they go, and then the teacher says, well, how might this guy drive a car? And they go, oh, I have 1,000 ideas, right? And they're like, he could have, we could put the gas pedals up here on the handles, and we can give him like robot, legs or whatever. The thing is, like, kids can come up with 1,000 ideas. People can come up with 1,000 ideas to solve a problem if you phrase it the right way. So how might we, bring peace about in the Middle East? How might we, strengthen our fiscal situation in the U.S.? How might we, this is Acre. How might we provide a better way for people to buy a home that gives them good financial outcomes and a 10 times better experience? Turns out you got to get rid of the mortgage and replace it with something else. So there's a lot of questions out there, a lot of smart people that are so beholden to the constraints that they've been given and told them are constraints, but they're usually not. There's usually a way to find a solution.
Kent, I can't think of a better way to end this, man. Thank you for that thought, and thank you for all the ideas that you shared, and for getting into some of this geopolitical stuff and your experience. I appreciate it. I will make sure that everyone knows where to find you and Acre on the internet. And just thank you so much for your time, man. I really enjoyed this conversation.
Nick, I appreciate it. And we'll do it again sometime. And hopefully next time we can do it in person.
Let's do it.
All right. Take care.
Take care. Thank you for listening to the Nick Halaris Show. We hope you enjoyed the episode and would appreciate your help with spreading the word by sharing with your network on social. And until next time, remember, it's not about pursuing success to unlock fulfillment. It's about learning how to find fulfillment in the midst of success.